Hello Wolfpack, we sit here with just 24 hours or less than 24 hours by the time this video gets out before the weekly candle close. We have identified in the past many critical levels we need to be looking at for this weekly candle close. We will identify them again in this video, and we will identify a few important lines and trend lines regarding the RSI on the 3-day chart and the 1-day chart structure in this video as well. So let's get into it without further ado. First and foremost, what needs to happen for this weekly candle close? Why is it so important? It is important because on the last weekly candle close, we actually broke and closed above the 200-week SMA. The 200-week SMA is this green line on Bitcoin. It is the most important moving average in Bitcoin's entire price history, right? It acted as the bear market bottom on both 2015 and 2018. And in 2020, during the COVID drop, it acted as the bottom as well. Now, we have actually dropped below it for the first time in Bitcoin's entire history, and instead we have bottomed out on this macro uptrending yellow line. However, why is this so interesting right now? It's interesting because we've come up last week and we closed a weekly candle just above the 200-week SMA. We are now coming back down for a retest of the 200-week SMA. The 200-week SMA sits at 28.8K. So if we close the weekly candle below 28.8K, that move would be labeled a fake out, and we would most likely, as per the macro structure, come back down to the bottom of this macro uptrending line and retest it again for support. On that occurrence, there is a chance we drop below this macro uptrending line, and there is a chance we go and make a lower low for the bear market. You know, possibly in that region between 14 and 12K, possibly in the region with the 300-week SMA at 17K, we just come for a double bottom, who knows? But the point is, if we lose this 200-week SMA on the weekly candle close, it would be extremely negative for Bitcoin. It would not be a good sign. And this is why I am not yet ready to claim that the bear market bottom is in. I think it is still too uneasy. The ground is still too wobbly. There's too much of a layer of thin ice. We need some thick support conquered, and the thick support we need to conquer, in my personal opinion, for there to be 100% confirmation that the bottom is in, is actually 28.6K. And you might think, well, that's ages away. And that's why I have a preliminary target at 23.8K. If we break 23.8K, we close a weekly candle above that, or even a couple daily candles, to be honest, we will be seeing a move up to 28.6K. So basically, breaking 23.8K would be a great swing trade, and then 28.6K would be the final test. Because it is, of course, the bottom of the macro bull market structure. You can see it held for support on multiple occasions. It's almost like the supporting level for that macro bull market structure. And of course, the bull market support band is trending down towards it, meaning if we do break above 28.6K, we would not only be breaking the critical level, we would also be breaking the bull market support band. So, for those of you who are wondering what needs to happen in order for us to be macro bullish, that is quite literally it. I think that is objectively true. I would say that that is not even my opinion. I would say that that is the objective reality of the situation. 28.6K needs to be broken for the bottom to be 100% confirmed. In the meantime, the critical levels are the 200-week SMA and 23.8K, both of which we can be watching for this weekly candle close, but ultimately they won't change the macro structure. They would just be short-term moves, right? So that's interesting. That's the weekly chart. And then another thing I wanted to talk about was actually the 3-day chart. And the reason I want to talk about the 3-day chart is because it's incredibly interesting what's happened here with the RSI. Now, we have a strong RSI downtrending resistance stemming from January 2021 on the 3-day chart. We can see it was tested in January 2021. It was tested here in October 2021 during the top. It was tested again in March during the dead cat bounce, and it is being tested again right now. Now, what we can see is that every time we've rejected from this line in the past, in the price action, we have seen a major correction on Bitcoin. We saw a major correction after rejecting there. We saw actually the bull market top after rejecting here, and we saw a major correction after rejecting here. So it would stand to reason that if we come up and reject off of that region again, which we are in the process of doing right now, we would be seeing a major correction. Now, obviously, if we break it to the upside, which would kind of come with a break of 23.8K, which is what we looked at in the weekly chart, that would be extremely bullish for Bitcoin, and that could help bring us to 28.6K for the final decisive retest of the bear market structure. So that's interesting. Keep an eye on that for the 3-day chart. Breaking that RSI line to the upside would be incredibly bullish, and it would definitely go hand in hand with a break of 23.8K. Another thing that would go hand in hand with a break of 23.8K, and this is why 23.8K, although it would not confirm the bottom, is incredibly important, is actually the MACD cross on the 1-week chart. if we come up and we close the candle above 23.8, we would have enough momentum to trigger a bullish MACD cross on the 1 week chart. If we fail to do that, we would be seeing a flattening out, some sort of rejection like what we saw here in March, right? We came up, we almost saw the cross, we rejected, we flattened out, and we went further down. That is something we were at risk at as well. So it is incredibly important in the next 24 hours or 22 hours by the time this gets out, that we do in fact close above 23.8k. If we do that, that is incredibly bullish for Bitcoin in the short term, and we will be seeing a retest of 28.6k, and hence we will be testing the entire validity of this bear market structure. But as of right now, what we can see really is that it doesn't particularly look too great. What we are seeing on Bitcoin on the 1 day chart, for example, is an ascending wedge formation, which is a pattern of exhaustion, and a bear flag formation as well, right? The dotted yellow line here, which we've actually broke to the upside on 2 separate occasions, failed to break out, and now we've come back down. And you can see we're rejecting from the top line of the bear flag formation, and we're looking to break down from the ascending wedge formation. We can see we have a bearish MACD cross from the daily chart as well. So it's not looking particularly hot on the daily chart. And as you can see on the 3 day chart, we're below resistance, weekly chart, we're below resistance as well. And so right now, I would say that, it's incredibly stupid to be bullish in this position, right? Purely because there's nothing bullish about this position. What we're seeing is we're just below support, below resistance. Fighting resistance, failed on multiple occasions, and now we're just still below. If we do, if we do manage to break out of that resistance, which I think could happen, and the way I think it could happen is via the CPI numbers, which are releasing in 3 days, right? That could definitely be a catalyst, right? CPI numbers releasing in 3 days. CPI has been raising, which is inflation, has been raising month on month and year on year for the US since I think, early 2021, I think, maybe late 2021, I don't know. But it's basically been rising over and over and again, which means interest rates need to hike, which means it's very bearish for all the markets. Is the first month on month, right? And year on year expectation and prediction from the market that inflation is going to be lower than it was last month year on year. That could be a bullish catalyst, and that could very well send Bitcoin over the line at 23.8k, and it could send Bitcoin up for a retest of 28.6. That is what I'm looking for the bullish argument, and that is in 3 days, right? So 3 days from now, we could very well see that piece of evidence that would support the bullish argument. Until that point, we just have to go for TA, and the TA doesn't look particularly good right now. But, again, please acknowledge the fact that I'm not saying it's impossible we pump here. I've just said, if the CPI comes in lower, which is pretty likely to do, right? I mean, oil prices have gone down, oil prices, gasoline, it's all gone down, right? All these commodity prices, they're going down. It's indicative of CPI going down year on year. That doesn't necessarily mean the bear market would be over, but it certainly would give more strength to the bullish argument, and it certainly would be a hit for the people expecting a lower bottom on Bitcoin. But yes, as of right now, I think that the macro invalidation has not been happening for this bear market. I think it's very clear we still are in a bear market, and I think any other prediction otherwise is preemptive, right? Whether it will happen or not is irrelevant. The question is, are we in one right now? Yes, we are still in a bear market right now, and no, there is not confirmation at this point that the bottom is in for Bitcoin. It's quite simple in my opinion. I don't think we need to overcomplicate it too much. I will encourage people to remember that catching the trend reversal is much more important than catching the bottom, because the bottom is very speculative, right? People have tried to catch the bottom the entire way down. They've failed on many occasions. And so catching the trend reversal is a much more, I guess you could say, what could you say? A much more profitable way to invest, because you're not risking, just the bottom keep falling out below you, right? So for example, if we do get a couple of daily candle closes above 23.8k, I would be buying Bitcoin. I would be holding Bitcoin until 28.6k. I would be selling at 28.6k. And if we get back above 28.6k, I would immediately buy again for the long-term bag and chuck it in cold storage. That would be my strategy for Bitcoin. And I encourage you guys to do the same, because that is what I see as objectively true. Obviously, you guys are free to disagree or agree with me on that. Some people are buying now. I would say that's dumb, but some people are going to do what they're going to do. Thanks for watching, guys. Now, before we end the video, I've got Wolves Crypto VIP. VIP membership, go to the YouTube channel homepage, click the join button. You can see all of the perks we have here. We release 4 altcoin trading setups per week. We have prioritized reply to your comments, and we have a 2-hour lecture on market psychology. And of course, finally, we have an exclusive Telegram group access where you can share charts and discuss the market with fellow VIP members. We also have BitGet, And BitGet is an exchange that I actually reached out to because I was in a very unfortunate situation with Binance last year during the December drop. I lost a lot of money on Binance due to the exchange's errors, not a fault of my own. It was not my personal trading decision. There was currency exchange fees that were completely out of whack on Binance. And ever since then, I've never looked back. I've gone to a new exchange. I still sometimes use Binance, but mainly my exchange here is BitGet, and I highly recommend you guys use this as well. It's got half the fees of Binance. It's non-KYC on an individual level, which is better than Binance because the whole point of crypto is non-KYC, right? And also it's got a very extremely neat and concise interface made by traders for traders, and that might sound like a cheesy slogan, but all of these coins here have been tested for market capitalization, been tested for rugs, been tested for everything you can think of, and they are the coins you can trade on BitGet Exchange for futures, and they are the coins that I personally would love to trade regardless. So you don't have to do all this cross-checking, whereas on Binance, if you're trading futures, first of all, you can't even do it in Australia because of regulation. Second of all, you've got a bunch of random coins on there. Many of them end up being rug pulls because they don't do proper market analysis on those coins before putting them on there, which is not good at all. So go ahead and sign up to BitGet using my referral link in the description below. And then finally, if you want to learn how to become a trader, if you want to learn how to trade and analyze charts, whatever it may be, you can join up the Crypto Academy's Become a Trader course. The Crypto Academy is a company developed by myself and MegaWell Crypto this year, and you can go on the website and read about it here in this bio. We've got a 10-unit course covering everything you need to know about TA and trading. We've got 59 students, and if you're interested in that, email us here at cryptoacademycourses@gmail.com, and we'll get back to you with all of the relevant information. You can ask us any questions you may have about the course. Thanks for watching, guys. Hope you enjoyed the video, and I'll catch you in the next one. Cheers.